The thing that I really hate about the crypto space is how gambling dominated it is. And our long-term goal is legitimately we want to replace banks. We want to be the one-stop shop that's as good as any, TradFi fintech product. Yeah, I mean, I view ourselves as a fintech, as a DeFi fintech. All the tools, all the pieces are already there to create a much better alternative for kind of this, really a global non-custodial banking alternative.
Mike, you were a successful founder before even touching crypto. You successfully built and sold your equity in Top Hat. You could have done like pretty much anything, why specifically crypto? Was there like something like a gap that you were saying like, yeah, I love this space, but it's missing this and I want to build it?
There was definitely a moment where I took a step back and said, why am I doing this anymore? I mean, I don't have to work anymore. Like I'm done. I've sort of exited the system. I have, complete freedom, and it made me take a step back and say, well, I actually like doing this. I like building companies. Like this is actually what I want to be doing.
Hi, I'm Edgar Roth, Senior Protocol Specialist at Symbiotic, and welcome to another episode of the Blueprints podcast. Today, I'm joined by Mike Silagadze, co-founder and CEO of Ether.Fi. In this podcast, we discuss Ether.Fi's journey from liquid staking to dominating restaking, expanding into DeFi and Fintech, and my takes on crypto's future. Hope you enjoy. Mike, thanks for joining. We like to start these podcasts with some rapid fire questions. So name us one underrated protocol that people should look into.
So the one that is top of mind for me is Resolve, which is an on-chain delta neutral stablecoin protocol. I can talk about why it's interesting, but maybe we can save that for later.
What made you understand that crypto wasn't just a fad?
I got into crypto really early. I actually bought some Bitcoin back in 2010, 2011. So I got excited about it right away. I mean, for me, it was the power of a stateless currency, something that, couldn't be inflated. I mean, all the value props that people like about Bitcoin. And I would say the DAO hack was actually kind of mind-opening for me in that, it's obviously the chain ended up getting rolled back, but it really kind of blew my mind that like you could have this like self-enforcing system where code is is reality in a sense. So those are probably like the two big moments for me.
Was the most under-considered risk in the crypto space?
There's I feel like risk in general is like people just don't really take it seriously in crypto. Don't look at it with enough skepticism, I guess. Whenever they see a return, team risk probably. Whatever you think the smart contract risk or the risk of some crazy financial derivative in crypto. The thing people often don't consider is the team that's behind it.
What's the biggest risk in restaking?
Well, right now it seems to be happening in restaking is that in certain circumstances, there's a bit of a bait and switch going on because the original pitch of restaking was that it was the super low risk endeavor where the risk that you're taking on is mostly operator risk. In the same way that you're taking on the risk that you're taking with staking is mostly, node operator risk. But with some of the restaking services that are starting to become popular, that's now completely different. The risk that you're taking on in some of those it's not the operator risk anymore. It's actually like in some cases you're taking the risk of actually financial risk, strategy risk. Maybe you're underwriting, some hedge fund, and that's obviously a completely different category of risk, not something that you should be willing to accept for, a 10, 20 basis point boost.
What's the biggest L you've taken on chain?
I haven't lost a lot of money on chain, mostly because I tend to be pretty conservative. The times that the most frustrating situations are when I've been right, but I've lost money anyway. When I think, oh, this thing is going to be a disaster, it's going to blow up, but somehow, timing just doesn't work out, and I still and end up losing money. That's happened a couple of times, never for really like material amounts of money, but I think those are the most annoying.
Yeah, must be a pain. Let's go into like the longer form questions. So, Mike, you were a successful founder before even touching crypto. You successfully built and sold your equity in Top Hat, which is like a tech company like focused on education.
Mhm.
So it's something completely unrelated to the space. So what was the process? What was that process of like building like going like from A to Z in an adventure? Like, do you feel like retiring after you've exited?
Yeah, that's a good question. It does change your mindset. I mean, I could talk a lot about this. With Top Hat, I mean, as you mentioned, it was an education technology startup. It was a 10-year journey. I had the fortune to take some liquidity to sell some shares early on, even before like the sort of the big exit. And one of the times that I did that, it was enough money that I didn't have to work anymore. It was sort of the FU money level. And there was definitely a moment where I took a step back and said, Okay, well, why am I doing this anymore? I mean, I don't have to work anymore. Like I'm done. I've sort of exited the system. I have, complete freedom in a sense. And it made me take a step back and say, well, I actually like doing this. I like building companies. Like this is actually what I want to be doing. And in a sense, that was a very freeing moment because I realized that that I was doing the thing that I wanted to be doing. It wasn't because I was trying to reach some arbitrary financial goal that was unrelated to what I was doing. I actually enjoyed building products and the company. So that was a bit of an interesting realization that in a sense kind of like opened things up and allowed me to really the freedom to operate. The other interesting experience that I had is when I had the larger exit, at the end, and this often happens to founders that have exits. I became very focused on how to manage my money because now it was actually a material amount of money that I needed to kind of take more seriously, and I spent maybe it was a period of like 6 months, maybe even a year, where I was just focused on it, and I was making decisions and allocations on and doing fine. I mean, I was doing well with it. Again, I had this moment where I took a step back and asked myself, like, is that really what I want to be doing with my life? Like, why do I need to compound as fast as possible? Like, why is that the thing that, matters to me? Like, why do I care whether, my wealth is increasing at 15% a year or 18%? Like, why did that doesn't actually matter. Like, that's a stupid thing to dedicate one's life to. And so then I took a step back and said, well, really, what I want to be doing, where most of my future wealth, this was before I started Ether.Fi, most of my future wealth is going to come from starting companies and building products. That's what I actually want to be doing. I don't give a shit about like moving money around and making number go up in some imaginary account. So I just said, you know what, I'm gonna my existing wealth, I'm gonna do really boring stuff where I just don't need to touch it. It's mostly just gonna kind of run itself, and I'm gonna focus all my energy on building products, building companies, because that's something that I actually enjoy. And if I'm fortunate enough to have a good outcome there, then that's what's gonna actually create wealth for me. And fortunately, Ether.Fi worked out, so that was a correct decision. But regardless, at least I kind of made that decision about the right thing to focus on.
Yeah, but why crypto? Like you could have done like pretty much anything, Like why specifically crypto? Was there like something like a gap that you were saying like, yeah, I love this space, but it's missing this, and I want to build it.
So going back to Top Hat for a second, the reason that I started Top Hat was because I had been a student recently. I started basically out of university, and I really believed in the mission. I wanted to make education better. I thought that was important. That was something I could get passionate about. So similarly, I've been a libertarian, for I don't know, as long as I can remember, really. And so, when I first read the Bitcoin white paper, it immediately appealed to me, immediately spoke to me as something that was a very powerful force for good. And so that's why, I guess, because similarly, it is a mission driven. I view Ether.Fi as a mission driven business. When everyone is forced to operate within this sort of fiat financial system, I mean, I'm preaching to the choir here. But I mean, we all know all the harms that come from that, from endless wars being fought all over the world. Lots of people dying, people's wealth being extracted from them. Huge transfers of wealth to people that hold, more inflation-resistant assets away from middle class. Like all these things are really bad. And I view freedom in creating what Ether.Fi is working on, which is this banking alternative, really like a crypto Rails bank alternative, as a way to increase the amount of economic freedom in the world. And so that's why, is because I believe in the mission. I was kind of done with higher education after 10 years at Top Hat, so I felt like that was a mission I could get behind.
So you guys started in the liquid staking business. Like it was a packed sector, like that was dominated by a big leader, Lido.
hmm
What was your pitch back then?
Well, so believe it or not, actually, the vision originally was exactly this. It was to build this sort of vertically integrated crypto product. Staking was always meant to be step one, and the reason it was step one was because I saw an opportunity there. I mean, it was the largest segment in DeFi. In some ways, it still is. There was clearly opportunity for innovation, in particular as restaking started, was just becoming a thing that was being talked about, and so I saw this as an opportunity that, like, step one was build a staking protocol that would get some market share, get TVL, get users, and then use that as a platform to build this broader kind of crypto neobank play.
Yeah, and so like during that step one, like what worked, what didn't work? Like it must have been quite challenging to like face like Lido, such a big incubator, like hugely DeFi integrations. Like what were
Yeah.
the learnings from that experience?
I mean, one thing I'll say is honestly, we weren't like I wasn't that worried about competitors or what other people were doing. We were really just focused heads down on building a product that was useful that people would like. Like that was 99% of it. Like everything else was secondary. We again just didn't really worry too much about what other competitors were doing, and we were able to move fast and capture the restaking narrative and ride that wave to success. And there were 1,000 details. I mean, I think we can take some credit or maybe mostly blame actually for ushering in a lot of the modern kind of points meta. Um, there were a couple protocols that had points prior to that. There was Blur, if you remember.
Yeah.
But it was still very small relative to what it became. Really Ether.Fi, and then with the Ether.Fi being the spark, and then Pendle being sort of the gasoline. Ether.Fi plus Pendle like made points just explode. I mean, it was basically like, okay, you could like issue these points, and now suddenly you can monetize them. And like these buyers and sellers of points kind of came together, where some would speculate on the value of the points, and others were willing to give that up in exchange for more of a fixed yield. Even without the restaking stuff, I think that would have propelled us to pretty significant heights, because
Mhm.
that just was such a powerful force for growth that we're still seeing. Pendle obviously with Athena now is being a massive growth driver. But I mean, again, there were thousands of things thousands of little decisions, campaigns, and all kinds of stuff that worked and didn't work.
And you think like without restaking, like in general, like would there have been like an opportunity for like a player like Ether.Fi to like take TVL away from Lido?
Sure. I mean, we would have found some other way to
Yeah.
win. Um, uh, yeah. I mean, I'm pretty relentless. I mean, would have found some other way to do it.
And when did you guys like really like had this aha moment about restaking? Say like, okay, like this needs a product, this needs an LRT. Like when did you guys had that realization?
Well, so originally we actually had a version of an idea that resembled restaking. And then as we started pitching, this was during our seed round, very quickly we had a few folks tell us like, "Hey, EigenLayer's doing this thing, a much more well-developed, well-thought-out version of what you're talking about." And so, pretty quickly came to the decision that like, well, we should just we should just build on that rather than like reinventing the wheel. So this was back when restaking was just I guess at the idea stage. I mean, it was just a bunch of YouTube videos that Sriram had online. So that was part of the realization that there was an opportunity to create a new player in the liquid staking space, because it was very clear that you had all this like effectively idle capital that like ought to be used for something more than just like almost like close to zero risk staking. Like you could actually do leverage that capital for more value.
And as a leader, how do you like operate like a segment expansion? Like the people that you hired, like when you were just doing an LST, like did they know that you would venture into like this like bigger vision and like different types of products?
That's a good question. I don't know that I did a great job of communicating it internally. And it was such a kind of mad rush and everything just grew so quickly. I don't know that, we talked about it, but I don't know. I don't, maybe it's a good question to ask them. Uh, I think everyone was just so focused on like what we're doing this week that I don't know how many other people were like kind of really focused on that long-term goal. Within probably 6 to 12 months of starting, I think we internally had reframed ourselves around like, look, our goal is this like end-to-end banking alternative. What does that look like? And so once we launched the liquid vaults and then started working on the cash product, it everyone kind of sort of I don't know that they believed it, but they at least understood. All right, I get what we're building
That's
towards.
the plan. Yeah.
Yeah.
And yeah, and nowadays like you guys have basically become the Lido of restaking. So like
Well, we hope to become the the Ether.Fi of staking. We
yeah,
view ourselves as working on like the broader market of staking. Restaking is obviously an important component of what we do, but we don't want to just be the best product for people that want to restake.
fair enough. But it was kind of like a competitive space, especially
Oh yeah,
at the beginning.
yeah.
So I would love if you could like share like what in your mind were the key to the success, and specifically like what made you keep this dominance throughout the years.
Early on, it became really obvious. It was obvious to me that the winner in the space was going to be the one that has the broadest reach, meaning the most DeFi integrations was available on the most chains. You had to be everywhere, and so we internally, this was my philosophy. Was we say yes to everything, every integration, every chain. We say yes to everything. That's our internal philosophy. And of course, the engineering team was like, "What are you talking about? You can't do that." And so what we had to do was come up with all kinds of creative ways where we could say yes to everything, um, but work with like a 10-person team. I don't even know if we were 10 people at that point. And so one of the things we came up with, I mean, I talked about the general kind of points meta, but we came up with this model of doing retroactive points, where we basically would just list all these integrations. So we would approach a protocol, or they would approach us, and we would say, "Yeah, for sure, 100%, you're in." And then we would put them up on the list of integrated protocols, and there were hundreds of them by the end of it, literally like 300 or 400 of them. And so we'd put it up, and we would say, instead of like accumulating points in real time, we would just say retroactive, meaning, "Oh yeah, don't worry about it. We'll we'll
We'll figure
eventually
it out.
catch up. We'll do it later," because it's on chain. So and so that allowed us, as an example, to just say yes to everything. And so we got into every single protocol. We did it first, and we were able to get on every chain. We worked really closely with Layer Zero, and they were a fantastic partner for us, where they actually helped us build our cross-chain implementation, which was actually very unique, because other cross-chain implementations that some other protocols chose were shitty. It meant that if you were minting, for example, the other LRT on another chain, on Optimism or whatever, you would incur slippage. You might have 10, 15, 20 bips of slippage if you mint it on Optimism. And that defeats the whole purpose, because like, well, that's a lot. If you're minting $100 million, that's a lot of slippage. So of course you wouldn't mint on there. You would just mint it on mainnet, and then move it to optimism, and then if you wanted to move it from optimism to whatever base, okay, you'd incur another 20 bips of slippage. Well, so of course you wouldn't do that. You would just so it defeated the whole purpose. And so that was obviously a bad solution. So we built our own, collaboration with Layer Zero, built our own implementation that had slippage-free minting on all the L2s, and you could instantly transfer from one L2 to another. And so that was fantastic. So we just dominated Arbitrum, dominated Base. Like we just, as soon as we launched, we became quite dominant because it was just the best solution. It all came out of this yes to everything
Mm,
kind of model. I don't. I mean, I could talk about more
yeah.
stuff, but it was just this very relentless drive, just hardcore 16-hour days, kind of nonstop. It was. I mean, it was. It felt like we were in a in a battle, right?
Mm.
So yeah, it was fun.
And I guess it sounds obvious, like when we talk right now, but like why wasn't it obvious, or like why at least like the competitors like didn't have like that same execution?
I mean, you could ask that question about any, market, I guess. I don't want to sound too arrogant. It didn't feel like it was that hard to beat them. It felt like everyone else was just always moving way too slow, and they kept making really bad decisions. With, I won't pick on anyone in particular.
But do you think that
Actually,
was based on like a specific set of wrong assumptions?
I don't know. Uh, what the reasons are. Like why do people make bad decisions or don't work as hard or whatever? I don't know, but that's um, like almost everybody else fucked up their airdrop. In fact, everybody else fucked up their airdrop, whereas our airdrop was pretty good. And it was just the mistakes that others made were just, to me, were really obvious. Like you don't do those things. Yeah, I don't know. I can't tell you why, but it didn't seem that hard. It felt like we were just able to move much faster and make better decisions consistently. And so that's why I wasn't that worried. I was like, you know what? Even if it was getting close, I'm pretty sure they're going to fuck up at some point and we won't. And then we'll speed ahead. Another thing, you asked this earlier, I guess, how are we able to keep the TVL? Part of the realization, part of the reason I think is that to me it was really obvious that if we didn't do something, all our TVL was going to go away. That basically we were fortunate enough that we had this points farm that worked really well to grow, but if it remains just a points farm, I mean, it's just obviously it's going to look like every DeFi chart where it spikes and then it, falls off a cliff. So in my mind, I knew that was the default. If we didn't do something, that's what was going to happen. Whereas I think a lot of founders and protocols, they see that early success and they just get hypnotized by it and they think, oh man, it's because I'm so smart. It's like, no, you're getting farmed by a bunch of Asian whales is what's happening. So you just need to be realistic about that. And so for us, that meant we had to be ready to very quickly, very aggressively, rotate all of that capital. As a whole bunch of it was exiting, we needed to immediately bring in new capital to replenish it. So it wasn't that we kept the TVL. It was more like we were able to keep growing so fast that we were able to outrun it. So that was one part of it. And then just innovating on the product side. Just releasing these other products that made it more sticky and allowed us to continue growing. It came from this really sense of this intense paranoia that the default is we're going to die, so we just need to think 5 steps ahead about how to not die, and that allowed us to be successful. Whereas others, I guess, just didn't. Maybe they were too convinced of their own brilliance, or yeah, just didn't think that it was going to happen to them.
Some people are calling restaking dead today. What do you think these people might be getting right or wrong? And as a builder in the space, like how do you see its evolution for the past 2 years? And do you think the space might have undelivered on the initial vision?
I don't know that the space didn't deliver. I think crypto is just a crazy market, and so people had. And I honestly, I was saying this back when things were hyped and going up into the right really fast. I was saying, look, guys, this is a very complicated technical primitive. Everyone is just piling in capital because they're farming tokens and they think it's a get rich quick thing. The reality is this technology is going to take years to mature. Um, and I still think that, like, I think it's a very powerful design primitive. What Symbiotic is doing, what Eigenlayer is doing, it's useful, but it's going to take time to find product market fit, to figure out what are the best applications. The AI agent thing is potentially could be the one. We see what Cap Labs is doing with the almost like this, hedge fund insurance restaking model. And I was saying earlier that's a bit of a bait and switch in terms of like it's a completely
Mm-hmm.
different risk profile. Um, so I just think, yeah, it's gonna take years. I don't think restaking didn't deliver. I think crypto entered a period of mania, and these things never usually work out. So now we're kind of in the trough of disillusionment, and hopefully over time it'll build up to be that important design primitive that I think it can be.
You talked about Cap, and I love Cap. Cap is live on Symbiotic and
Hmm.
Symbiotic only for now. Um, when you see like this type of use case for restake capital, and I'm actually seeing like a lot more like use cases coming in trying to
Hmm.
build on that vertical.
Yeah.
How do you think like it would shift the space, like if it starts being the dominant use for restake capital? The great thing about use cases like Cap is that they actually, because the restake capital is taking actual risk, they have actual willingness to pay
Yeah.
for the economic security, which is
Yeah.
in
I don't.
itself maybe a paradigm shift,
Yeah, for sure. I think we are allocating to cap, but very a relatively small amount of capital. When we're doing it in a way that is like we're working through a prime broker. I mean, we're doing it in a way that's like very paranoid as far as
Mhm.
risk management. We see some others not taking that step and just like aping in. It's hard to exactly quantify, but the risk being taken there is like 100 times more than the risk that you're taking when you're staking, maybe 1,000 times more. I mean, it's massively, massively more risky. It's almost guaranteed to blow up in a like a major crypto correction. Like that's how much risk that you're taking there. So we would never make that major, maybe even any part of like our core LSD strategy or LRT strategy. It's just as a part of a EETH, like our
Mhm.
larger, we would need to almost segregate it into another asset because it's an
Yeah.
enormous risk. And the yield, if I mean, I also like Cap. I'm a big fan of the team. I like it's a really innovative project, but I don't know that the yield is worth it at this stage because right now it's and correct me, I think it's like a 3 or 4% yield or something. It needs to be higher than that. Like it needs to be a lot higher to make it worthwhile. I mean, you're it's an insurance fund. You're underwriting the risk of a hedge fund. The hedge fund keeps the upside. You take all the downside. I need to be getting paid a lot more than 3%.
I mean, if Ben from Cap was here,
He
he
would
would
say
tell
that,
you that
sure.
there are legal
Yeah, yeah,
agreements that you're gonna find your money back. But as an LRT, like you,
yeah.
it's gonna be a hard pitch for your end stakers
Right.
that, yeah, don't worry, we're gonna ask the hedge fund to give the money back. Do you think maybe
Yeah.
is it just maybe that these use cases might be like have a strong PMF, but maybe like as an LRT, you need to be kind of very risk averse because.
We would need to segregate it. We would
Mhm.
need to almost have like the high risk ETH, and it's like, all right, cool, yeah, that one, it'll give you 5% yield or 6% yield, but like just understand you're taking a lot higher risk there. Again, it's more that it's a fundamentally different risk. It's not again, node operator risk is the danger there is like incompetence, like someone really screws up. Like it's very hard to imagine someone being like malicious because they're almost like risking their entire business at that point.
If the protocol even has slashing
Yeah, and I have
injected.
to, yeah. So that's very different than, again, someone's taking financial risk, strategy risk. They're taking leverage on something and farming Athena or whatever. Like, okay, it's a different thing. Like I said, it's like 100 to 1,000 times more risk. Like restaking risk, as it originally kind of the economic security thing, like you can almost round that down to zero. That's how
Mm.
low it was. This is yeah, it's high.
So Ether.Fi now has been expanding way beyond just restaking. Like as you said, like you want to make the Ether.Fi like products like more sticky. And on the pure Web3, you've expanded into like these DeFi vaults, and you've even went like going all the way to like partnering with the team on Hyperliquid Hyperbit. Amazing team, by the way.
Hmm.
Can you talk a bit about like this like Web3 product expansion, and then we can talk about the rest.
Um, yeah. So I mean, as we're building out this vertically integrated crypto app, like we like what are the products that people want to own? Like it's almost like what's in someone's portfolio that they generally want to own. They want BTC, they want ETH, they want stable coins, almost entirely USD stable coins. And then what's the next thing? Is it Sol? Is it Hype? Those are probably the two contenders. And the Hyperliquid ecosystem has such product market fit when it comes to trading. The ecosystem is growing so fast that it seemed like a good bet. From the user standpoint, we're obviously building something that we expect to have broad adoption. Not, we're not building for like a DeFi, degen niche. So this is why centralized exchanges are so popular. A centralized exchange, you don't give a shit what chain you're on. You're not signing weird hex transactions. You're not having to remember, some random, private key or seed phrase or anything like that. All of the complexity is abstracted away from you. And with one or two clicks, you can get to what you want. Well, if we want DeFi to also get widespread use, I mean, that's the level that it needs to get to. So the question we ask is not, oh, how complicated is this going to be technically to implement? The question is like, well, what's the job to be done for the user? And the users really want to own Hype. They want to, stake it. They want to earn yield on it. They want to be able to borrow against it. So the question is just, okay, how do we do that? How do we let our users do the thing that they want to do while not having to give a shit what chain they're on or like what all the like machinery in the background is doing to make it possible while respecting the sort of self-custodial nature of it. So that was the decision-making process is we want to be the one-stop shop that's as good as any, TradFi fintech product.
Is this why you're almost evolving into like a fintech firm now?
Yeah, I mean, I view ourselves as a fintech. Yeah, as a DeFi fintech.
Nice. And what's the vision? Like, do you think like is there a way for like pure Web3 things to be like more like user friendly? Like
Yeah, of
all of
course.
the account abstraction work that has done in the past years, like it seems like the Web2 use of crypto is the most PMF. Like you see, like in a way, like all of the TVL of like big ETFs. It's beating like almost any other product in crypto.
Hmm.
In a way. And what do you think that says about the adoption cycle that we're in like the state of the space?
Um. Yeah. So I mean, honestly, I even think the account abstraction stuff was an excuse. Like we built all our stuff actually before. I don't even think we're using account abstraction now. Like it makes our life easier for sure, but we built a pretty nice user experience without having to do any of that stuff. Without having any of that that tooling. Um. So it's just that the easiest the path of least resistance to cashing out to making money in crypto was launch some vaporware bullshit thing, pump your token, and then that's it. I already made money. Like I don't need to do that anymore. I just actually want to build the thing. So we just did the work. We did the work to build a product that that people actually want. And our long term goal is again, legitimately, we want to replace banks. We think the product is already there. Well, all the tools, all the pieces are already there to create a much better alternative for kind of this, really a global non-custodial banking alternative.
And when you think about hiring, when you start as an LST, and we talked already about like what it meant as a leader to pivot to an LRT. how do you like execute like these transitions and these different expansions? Do you communicate very often like the way that you think about your company like with your team? How do you how what type of people do you need to hire to like expand into like more fintech, web 2, maybe even tradfi roles? How do you think of that?
Um, I mean, I think definitely I and probably most people could do a better job of communicating and keeping kind of the focus on the long term vision of what we're building. There's a few things that help. One, we're entirely in office, so that's very, I guess, unusual in crypto. But yeah, I mean, we all work together every day in a shared space, and that just makes life a lot easier. Because things happen much more organically. Whereas when you're remote, you have to work a lot harder to keep everybody aligned and excited, motivated. So that's one thing that helps quite a bit in terms of the hiring. What types of people to hire. I mean, I actually think everyone's looking. There's a lot of like talk about culture fit and what kind of what sorts of people you want to hire for this company versus that company, so that there's that alignment. And I actually think that's mostly a red herring because I everyone is actually looking for basically the same things. They're looking for people that are really smart, that are super internally motivated, and can get things done, and that work really hard. And that aren't assholes. I mean, that's an important prerequisite. So if you fill your company with people like that and hold the bar super high, things generally are going to work out, regardless of what particular, whether it's an education technology company or a crypto, fintech. You're generally, if you hire those types of people, you're gonna do well. Focusing on some of the more superficial stuff, what people call culture fit, is, as I said, it's mostly a red herring.
Mm.
Just hire really smart people. Hire the top 1% of talent, and you'll be fine.
How do you make sure that someone is not an asshole?
That's actually pretty easy to. I mean, uh, obviously, I mean, sometimes maybe it's hard. It can be hard to assess during an interview, but if you have an in-depth enough interview process like that, that usually comes out. We use a process called top grading. It's something I've been using for like over a decade now. Um, it's an interview style. It's a structured interview format that looks at someone's track record. I mean, if someone's an asshole, that's not something that just happens overnight. It's an attribute that generally follows someone. So when you go through someone's kind of history and see how they've interacted with others, how they've how they fared in other roles they've had, those types of things just really like they kind of become obvious. The really hard part is like figuring out whether someone is um, truly top talent, or they just were fortunate enough to be around other people and they just kind of coasted
Mm.
along, and what was their contribution versus the people around them. Like those are the things that are kind of harder to tease out.
Interesting. And looking back at like the current state of crypto right now, like you guys are like have been like heads down trying to like making at the crypto adoption as fast as possible. How do you think? What would you grade the entire space work so far? Like, do you think we're doing a good job? Like, what should be improved?
It's a bit of a double-edged sword, but I mean, the thing that I really hate about the crypto space is how gambling dominated it is. It can be disheartening just how extraordinarily Ponzi coded crypto is. When talking about products, user adoption, revenue, like things that actually really make sense, and seeing, um, let's say, investor behaviors or user behavior, it's almost like you feel like you're an alien speaking a different language. Like people may nod and smile, but it's just they're the complete. That part of the brain in crypto, for the most part, is just missing, because when 99 or 999 things that you see around you in your kind of ecosystem are just like one ridiculous Ponzi token nonsense thing after another. It's just you never even develop the muscle to ask the right questions or think through, all right, like, does this actually make sense as far as a long term viability, and is there real value creation here? People may use some of that language, but just again, for almost everybody in crypto, just that part of their brain just doesn't exist. They just don't know how to evaluate or assess or even see that when it's there. So that can be pretty depressing. So yeah, I would give it a pretty low grade. On the positive side of that is, if you're doing that, if you are one of the few that's building, a real product, it's just it's so obvious that just in 3 years, 5 years, whatever, we're just gonna absolutely dominate. Like, I don't need to know what's gonna happen in a month, in 6 months, or whatever. But I like for Ether.Fi specifically, like, I mean, I know we're gonna be gargantuan in like 3 years or 5 years. Like, it's so obvious that we have product market fit, that it makes sense that like the system sort of works. Um, that like all the other cancerous nonsense around us, it just doesn't really matter. It's eventually going to die off, even if there's like temporary growth spurts here and there.
And so if you had like a relative, like let's say like a son or a nephew or like a daughter, let's say like that person wanted to like venture crypto, just finished like school, wants to become a protocol founder. What would be your advice to that person?
That's a good question. I mean, I'll say the vast majority of people shouldn't be founders. Um, it's probably a bad idea. It's just not a fit for most people. The second thing I would say, it's probably a good idea to try and work in a space that's not crypto for some amount of time, to especially a small company, to really internalize and understand like what it looks and feels like to build a real business, so that when you get into crypto, you can sort of like map that understanding to what you're building.
What would like following up on that? Like, what do you think was harder to build? Like Top Hat or Ether.Fi?
Top Hat was way, way harder, like 100 times harder, because that could be a whole other podcast. Education technology is like one of the worst, maybe even the worst market, the hardest market to build in. The failure rate is, I don't know, 99%. Just it's extraordinarily hard to build real businesses in education technology, for all kinds of reasons. So yeah, it felt like uphill through the mud the entire time. It was just extreme, sort of max pain the whole way. Again, there's pros and cons of this. I mean, crypto is just awash with capital. Like, just there's never a shortage. Even in the bear markets, there's not really any shortage. So it almost feels like anything you do is going to have some degree of success, and it's just, can you really kind of nail it and like max max it out.
Interesting, interesting. So if we just take a step back and look at the current like crypto cycle, this cycle doesn't feel like anything else. That I mean, you've been around in Bitcoin since 2011, so
Hmm.
you know how like in 2017, for example, everything topped at the same moment.
Hmm.
In 2021 was almost the same. Here it almost feels like there are like this magnificent sevens that is lifting the market up,
Hmm.
but almost everything else is kind of
I don't know if that's even true, actually. I mean, if you look at tokens, I've been saying this for well over a year. Now, I don't know what name it's had back then, but now it's like revenue made a meta, buyback meta. That's if you bought tokens that have value accrual to the token, so put it Ether.Fi aside, although we've done pretty well over the last year. If you bought Aave, if you bought Hyperliquid, if you bought, I don't know what other tokens have good value accrual, whatever, you would have done really well. You would have beaten the market. You would have beaten Bitcoin and ETH. So I do think fundamentals are starting to matter a lot more. It's a little bit of a meme now, which is bad, but I do think fundamentals are starting to at least more people are talking and thinking about them, which is really healthy. So it's not completely chaotic. I mean, the the broader issue is not a crypto issue. It's more just a sign of fiat end of times. Like that's really uh,
Mhm.
the root kind of problematic. I mean, we're reaching almost like the exponential phase of just unlimited money printing, the everything bubble kind of stage. People just walking into you know like extraordinary levels of capital misallocation. But that's again that's more of a broader economic phenomenon. It has nothing to do with crypto. Crypto is
Yeah.
just I mean, in some ways, the beneficiary, I
Mhm.
guess you could say, of that. So that's what's leading to the worst aspects of it. But
Yeah.
again, that's not a crypto thing.
Yeah, yeah, but yeah, and then in a way, like we're like entering like a maturity phase. But there's this thing that's coming like very soon, which is like the real everything bubble, where like we go into like real hyperinflation, and like we're saying, like we start to see like real like capital like misallocation.
Yeah.
Do you think this is gonna set us back in time in terms of maturity?
Again, I would I don't look at it through the lens of like what's good or bad for crypto. I mean, fiat systemic collapse is going to be bad for everyone. I mean, you can think that like you own some Bitcoin, you're gonna have a party and it's gonna be great. Like, no, it's just this is gonna be bad for everybody. It's I mean, it could go really bad. I mean, civil wars, massive unrest, just like when there's no food,
No, of
it
course.
doesn't matter how much Bitcoin you own. Like, you're talking about like really bad stuff. So, but it also becomes very unpredictable, right? Like, yeah, it's impossible to predict what exactly how it's going to happen or even when, I guess.
Fair enough. Fair enough. Before we end this, I have one question I want to ask you. Like, what's like one core belief that you've had about crypto that's completely flipped in the past years since you've been building on it?
It's something I've thought about a fair bit, and really, I don't know that I fully have a formed opinion on this, but something I thought about is, what is the future of money look like? What is the ideal form of money? I actually don't think it's Bitcoin, because I do think that the absence of an intrinsic underlying kind of connection to reality um, is there. I mean, I think an essential component for gold, for example, is that it does have industrial utility, which sort of is like this like thin tether to reality where like look it's used for jewelry which has value. People like shiny things that look pretty. That's fine. It has industrial uses in electronics. It has all kinds of nice properties. So there is that base value in addition to obviously monetary premium. Like the
Mm.
question that I thought to myself is, could gold become the basis of money if it didn't have that industrial utility? And I always come back to the answer that no, I don't think it can. So what is the best money? I mean, is something like Bitcoin? And I think the answer is probably not. Is it Ethereum? Also, I don't think Ethereum is the right, but is it maybe something built on Ethereum that is more of like a basket of goods kind of approach where you take about again this is probably a bad idea, but a bunch of futures contract on a basket of goods that is more representative of people's the types of things that people would actually consume. And now in our current modern economy, you could actually do that. Whereas historically, obviously, like it was too complicated to implement. So I think a lot about that a lot. And I wonder if the answer is actually that there's not one perfect money,
Mhm.
that you actually may have, tens or hundreds of different kinds of money. And that's actually okay. Um, there are other examples where, as soon as things were kind of unshackled from, very heavy government intervention, all of a sudden they just multiplied and you realize like, oh wow, we were all relying on this one thing that was just forcibly standardized. But then as soon as the controls were lifted, now there's a thousand variations and people are totally okay with that. So I wonder if that's the right answer to what the right kind of monetary system is that it's not one money that everyone uses. It's actually hundreds of different types of things, and people just choose their basket, and as long as there's an open market for exchanging and uh, you know, swapping between these things, that'll actually be completely manageable for people in their day to day lives. So that's something that's a view that's evolved over the last 10 years of crypto.
Interesting. Well, Mike, thank you so much for coming on. I had an amazing pleasure talking with you for this past hour. It was great. Thanks for the insights. Is there anything you want to share to the audience before we end this?
Go to Ether.fi, download the app, try it out, tell us what you think.
Cool. Perfect.